Hello friends, I am Debajyoti Bhattacharya, a chartered accountant, and today we will discuss income tax provisions in relation to sale of agricultural land in India. The Indian agricultural land is the backbone of economy, providing employment to many persons and producing feed for the nation. Now, agricultural land means land upon which agricultural activities are carried out, and it may be situated in a rural or non-rural areas. Agricultural activity has been held to be an activity where human effort has resulted in growing of crops. Sale of land can result in two types of income. If the land is held as stock in trade, then the sale of such land results in business income. Whereas if the land is held as investment, then the income on the sale of such land results in capital gains. When the agricultural land is sold, it may be entirely exempt from income tax, or it may be taxed under the head capital gains. Agricultural land in rural areas in India is not considered a capital asset. Therefore, any gains from its sale is not considered under the head capital gains. Urban agricultural land qualifies as a capital asset, hence capital gains shall arise on sale or transfer of urban agricultural land. Nature of capital gains will be long term or short term and will depend upon the period of holding of the asset. If the period of holding is more than 2 years, then the capital gain will be termed as long-term capital gain. If the period of holding is shorter than 2 years, it is short-term capital gains. Long-term capital gains shall be taxable at 20%, whereas short-term capital gains is chargeable at slab rate. If someone is buying and selling land regularly in course of business, in such a case, any gains from sale of such land are taxable under the head profits and gains from business or profession, and no capital gains will be applicable in such case. If the agricultural land is in non-rural areas, sale of such land attracts capital gains tax. Exemption can, however, be claimed under Section 54B of Income Tax Act when the following conditions are fulfilled. The exemption is available only to an individual and HUF. The land sold must be used for agricultural purposes for a period of 2 years before transfer. The new land for agricultural purposes should be purchased within a period of 2 years. The new agricultural land should not be sold within 3 years. Amount of exemption. If the cost of the new agricultural land purchased is more, the entire capital gains are exempt. If the cost of the new agricultural land purchased is less, capital gains less the cost of new agricultural land is chargeable to tax. TDS applicable on sale of agricultural land. Generally, TDS at 1% is deducted on transactions involving sale of property where the transaction value exceeds Rs 50 lakhs. However, TDS on property is not applicable on sale of purchase of agricultural land, even when the transaction value exceeds Rs 50 lakhs. My friends, hope you have understood the provisions of capital gains when we sell agricultural land. Thank you very much for watching. Take good care. Stay positive, love yourself and your family. God bless you all.